What are the normal terms of a hard equity loan? The most common terms on a hard equity loan are that you're going to get a loan decision within 24 to 48 hours. There's going to be low to no application fees. There's going to be a minimum loan amount of $25,000. Sometimes it can be higher depending on the lender. Some of them might start at $1 million. So you have to ask the lender to confirm exactly what their minimum loan amount is. You're going to be able to have a loan term of 6 months, 1 year, 2 years, or 3 years, and a loan amortization of 30 years. It's usually going to be interest only payments. So the borrower is not going to pay principal. The principal is going to be paid back as soon as the loan is repaid in full at the end of the 6 months, 1 year, 2 years, or 3 years, depending on what the lender and the investor have agreed on. There won't be any prepayment penalties. Besides that, the hard equity lender can fund in a matter of days, which means that the borrower is going to be able to close in a few days instead of closing in a month or 2 months, which is how conventional or FHA loans usually work. The borrower must close in the name of an LLC or limited liability company. Other terms and conditions may exist, but these are the most common terms that you're going to see and that you need to understand before even mentioning them to the borrower. Also, before offering specific terms, always contact the hard money lender you're planning to deal with to make sure their turn times are not delayed, especially when it comes to an approval. Some lenders are sometimes busy, they have busy seasons, or there's times when they're down in terms of employees that they have. So if there's less people on staff or somebody called in sick, then sometimes approvals will take longer, closings will take longer. There's different things that can happen in the middle of a transaction. And you don't want these turn times to double or triple, which will slow down the entire transaction. So you need to be aware of these things beforehand so that you can impress your borrowers and do a great job and provide great service.